Welcome everyone to this Cup of Coffee podcast with me, your host Tom Dillon. This has been recorded live at our Tin Pot Mobile studio and broadcast around the world. Today's topic is making tax digital. I'm excited to be joined by incredible speaker today, or guest, David Hurd. Before I start, I'd like to say by way of a disclaimer that today's a wonderful discussion, but that nothing said here constitutes financial advice, and you should always take professional advice before investing your hard-earned cash. There may be the odd unplanned swear word along the way as well. The format for today is probably a bit more Q&A than usual. I'll just be asking David some questions, and we'll busk it from there. With regards to David, David is a tax director at Champion Accountants, who have 4 offices across the northwest of England. And as for David himself, he's been a chartered accountant and chartered tax advisor, and he has about 15 years' experience. With regards to David, it's worth noting he isn't just an accountant, he is my accountant. Which I mention it now because otherwise you might listen to this and go, Tom's been a bit weird with that guy. He's been that's a bit much, isn't it? But I've known David how long have we known each other, David? Is it 10 years?
About 10 years, yeah. About 10
Yeah,
years.
so I don't. I say that in advance. So everyone's clear on what's happening here, which is that me and David know each other fairly well. The format, going back to the format for today, is we're going to do some questions. I've lined up some sort of basic questions, and then we've taken questions from other people. And judging by the amount of questions that came in, I had to filter them out a bit. So apologies if your question didn't make the cut. I think there's a lot of interest in this topic, and so there should be, because making tax digital, for those who don't know, David's going to cover it better than I will, so I won't talk about it too much before we get straight into it. But I think it really will affect people, and that's almost certainly why you're here, is to work out how it's going to affect you and people you care about, and to try and minimise that impact. And so I think there's a good chance this will have a bigger impact than maybe some people realise. Let's find out if that's true. Hello, David. How are you?
I'm good, thank you, Tom. I'm all good.
Excellent. Well, let's get straight into it. So, questions from me first to cover some of the basics off. And in case anyone thinks David sounds more intelligent than he should do, I should point out he's had all these questions in advance, because I refuse to throw questions about complicated tax matters to anyone without at least having seen some of the questions. So he's like, oh, he's fairly prepared for that. It's because he's prepared for that, is why that is. But that's a good thing, because it means you get more value from his excellent answers. What's all this about then, making tax digital? What on earth's going on here?
Right, so it is HMRC's move to basically introduce digital reporting for self-employed and landlords. And we are looking basically now at a quarterly reporting regime
Mm.
for anybody who earns over £50,000 of gross rental income or gross self-employed turnover. Um, that's coming in from April this year, and then we're going to see some changes going over the next few years as well. Essentially, with this quarterly reporting, we are going to move from the system whereby you can send your bank statements to your accountant in January, they do your tax return, and you're done for the year, through to you have a quarterly report to do to June, due by 7th of August. Then you have a quarterly report to do to September, December, March. You're essentially going to have 4 digital returns to do each year. And then you're going to have your self-assessment on top of that, which will be like a balancing return. So you're actually going from 1 return to 5.
Now this sounds like excellent news for you and bad news for
Mm.
me. Would that would that be a good
Uh,
summary of the situation?
not. It's not good news for you as landlords. You have to do things more regularly. Um,
Right.
it's not necessarily good news for us, because we obviously have to deal with
Need
quarterly
more
stuff from
work.
landlords who only really want to do it once a year. So it's not necessarily great news for everybody, but it's here. I can't see it. Can't see it changing now. It's been pushed back 2 years already. Um, we're at gross rents of 50,000 for April 26, so it's probably not going to catch your accidental landlord. Um, but next year we go down to 30,000 from April 27, and the year after 20,000 from April 28.
I'm going off script immediately because I know you like that. Which is, what about people? I'm thinking of people now who have got the odd property, and I can picture a few of these people. Maybe some are kindly listening or watching this. Which is, but then they've got maybe a maintenance business as well, or management business. This, that, and the other. So some self-employed income. My guess is that then, taking the first year as an example, 50,000. That would be a combined for the lot of it,
Yeah,
would it? So if you've got
yeah,
25,000 of one and 26,000 of the other, then that takes you over the bracket as well.
yeah, and it's gross positions as well. So it's not your rental income net of all your expenses. It's your gross rents or it's your turnover.
Well, speaking now to the listeners rather than to David, this sounds great, doesn't it? I'm massively in favour already. Uh, well done, the government. Can we blame the Tories for this, or is this a Labour problem? I'm not getting political here, but just in
I,
terms of,
I, I think really with the move to digital software for all businesses really across, well, for the last 10 years, I don't think it would have necessarily mattered which government was in to
okay,
introduce this. Uh, Digital software is there. I think HMRC have decided we're going to use it and we're going to make people use it. Um, when they brought out the policy document of what they were trying to achieve here, their points were they wanted to make it easier for everyone to get the tax right, and they wanted to close the tax gap that was in the self-employed and landlord environment. So that would be your people who accidentally get the tax wrong,
mm,
landlords who accidentally um, don't declare any income on property, but also it makes it more difficult for those who were trying to avoid paying any tax and doing it deliberately incorrectly. It makes it more difficult for them to do that. So it's
without getting into
closing
the
that
long
tax
weeds,
gap.
without getting into the weeds, because I'm excited to get onto some other stuff, and we've got a lot of questions to get through. But do you think it achieves that goal?
I think I think it probably will help that longer term. Yeah, I think it
Okay, there you
will.
go. You heard it here first, or if you heard it somewhere else first, then you heard it here not first. Um,
Second.
let's. This it might not be second. Loads of people might have been saying that. Uh, Question two, you've touched on it, but let's give you a chance to really round it out. Who does it affect?
Right. So it is self-employed individuals
Yeah.
with businesses, and it is landlords with gross rents over £50,000. That
What
is from
about what
April
about
26.
what about directors of companies? No,
No,
no
so this is
difference.
this is a no, this is a making tax digital here is for income tax self-assessment. So you
Oh
might
yeah,
see the phrase MTD
got you.
for ITSA. So making tax digital for income tax and self-assessment. Um,
If you see that phrase anywhere, people then just hang yourself immediately. No, don't. But
no,
you know what
don't
I
do
mean.
that. Don't do
Crikey,
that.
no.
Um,
None of this
it,
constitutes life advice.
once people are in this system,
Mm,
it will probably become normal quite quickly. It's like a VAT registered business having to do a VAT return every quarter. Once you're into the system, it's a bit of a shock to start with,
yeah,
and it's a bit more administration more regularly. But once you're
yeah.
in it, it shouldn't be too bad on an ongoing basis.
I don't know anyone else, but I'm getting this feeling of David with like a warm blanket. Like I feel better about the whole thing straight away.
Well, that's good.
Like it might all be okay. Maybe
It's
this is
nothing.
why he's my accountant.
It's nothing to be scared. It's nothing to be scared or worried about.
Mm.
It's a quarterly return, just
Now I
not
feel
an
like I'm
annual
about to go
one.
in for a minor operation.
Just sign
Just count to
here.
10, Tom.
Yeah.
Just count to 10. Who's the Prime Minister? Okay, you were. I cut you off a little bit. You were about to talk about future years where the numbers kind of change a bit, don't they?
Right. So
Talk
the
us through that.
future. So in the future years, the plan at the moment. And bearing in mind this has been changed a few times,
Mm.
but the plan for now is it's 50,000 from April 26 of gross rents. April 27, 30,000 gross rents. April 28, 20,000 of gross rents to be within the MTD system.
Yeah.
So possibly by April 28, it might catch your normal everyday sort of accidental landlord.
Mm. Yeah.
Possibly, depending on the size of the house in the area. Um, you could clock up 20,000 of gross rents now, probably fairly comfortably.
Sure. If you've got a nice house in a nice area, or maybe more likely two terraces in the middle of, in Bolton
Yeah,
or whatever,
yeah,
that two
you're
houses
getting
gets you
there, aren't you?
20,000, doesn't it? Yeah, yeah.
Yeah. So I think realistically, it is going to catch most landlords um, by April 28. Obviously, there's nothing to stop HMRC changing those figures. There's also
Mm.
nothing to stop them saying by April 30, it's every landlord with rental income. There can be changes. They can introduce things like that,
Yeah.
and it's possible. To be fair, I think it is possible.
£20,000, looking at the smallest of the figures, is £1,667 a month, isn't it? So if you're making that,
Yeah,
then that's not that difficult to
yeah.
get to.
It's two small houses, isn't it? Really, rental income,
Sure, sure,
and
sure.
you're well in the system. Yeah.
Yeah, absolutely. Okay, let's get straight to the good stuff. Are there any loopholes? How do I escape from this system if it sounds awful to me?
No, in short, there's not really any loopholes to this. It's policy which has been brought in specifically
To avoid
for
loopholes.
people in those categories. Um, you're either in it because your income circumstances put you in it, or you're out of it. Um, I don't think people should be that worried that they try and look for loopholes either.
Yeah.
This it will be a change for people to start with, going to a quarterly basis, but longer term, it shouldn't be too bad.
Okay. How do you think this plays out? Maybe this is me again wandering into politics, which is something I like to do, but maybe not. Maybe not a good idea. Which is, I wanted to ask, how do you think this plays out in terms of? I'm currently 45 years old. Am I still making taxes just when I'm 70? Maybe it'll gone. Maybe I'll
Yeah.
be scanning my retina and they'll take the money from there. I don't know.
Well, when you're 55, you'll certainly be doing making tax digital like this.
Mm,
I can't see that changing in the medium term. I don't see why it would now. They introduced making tax digital for VAT back in 2019. There is no talk of that going backwards. There's just I don't see there being much of a chance of that at all.
okay.
I suppose 20 when you're 70, what are we going to be in then? Yeah, 30 years in the
2050.
future. Yeah, 25 years in the future. They could be doing lots of other stuff with the technology they might have available then. The tax will be coming straight out your bank.
Oh, stop it,
Could be
David.
anything. But no,
That's your
there
dream,
you
not
go.
mine.
Worry about that one. Yeah.
We will. What might be my last question? I might come up with another one, and then we'll get on to answers to listeners' questions. My last one is: will you be upgrading your car again on the back of this?
No. No,
No.
definitely
Right.
not.
Okay. Well, can I hold you to that when I come and see you? And
You can.
you got
You
more
can.
you something or other. Okay. Good. So we're going to get into answers to listeners' questions now. Actually, no, we're not. We've got one more before we do, because in case people get bored and wander off this podcast, let's at least round out the basics, which would be, who's this going to affect the most? My experience is things that affect people who just aren't ready for it, get blindsided by
Yeah.
it, and maybe so is that the case here? And who is that? Who if you're listening to this and you're thinking I'm ready for this, haha, but maybe I should pass this on to someone who pass on the link to someone who's not ready. Who would that be? Do you think?
Right. So this is not really going to be your sophisticated landlord running their portfolio as a business, because they're already
Mm,
doing something like this anyway. This is going to be your landlord who has a couple of properties. Well, yeah, for the first year, maybe more than a couple of properties, but who has a few properties
yeah.
and who drops their stuff off to their accountant in December or January and says, "Here you go, can you put it on the tax return?"
Mm,
They're the people that are going to be most affected by this, because they probably don't keep any records at all. They might keep, they might have their income in a separate bank account. They might not even have it in a separate bank account.
right.
They drop the stuff off at the accountants, and the accountant does their tax return. That going forwards isn't going to be able to happen like that, because this digital reporting means that people have to have a form of approved software to make these submissions. So it is going to prompt people to do things regularly. So that is going to be the biggest change for those who at the moment don't really want to do any admin at all.
So that feels first of all like genuinely important. I'm kind of making fun as we go through this, but genuinely important that if people are I'm going to say older people. I think it's more likely to be that, isn't it? But might not be. Might be young
Yeah.
people. But I'll say older people who've done it this way for many years, got a couple of properties, got 5 properties, just manage them, know the tenants, whatever else. Are very much
Yeah.
landlords rather than entrepreneurial types. Fine. And yeah, it's a shoebox full of receipts at best. And now suddenly they come to this and go, what? Because everyone's going to need some sort of software and someone to then obviously
Yeah.
manage and use that software
Yeah.
on their behalf.
Yeah,
Well,
so
okay.
those types of people will be needing to go to their accountant and say, "Can you help me with this quarterly?" Or the accountant should go to them really and say, "We've done your tax return for however many years. We know you're in the system." Um,
Hmm.
HMRC will be sending letters out as well to, or some of them have already gone out to taxpayers that are in this system now. Um, yeah, they'll be the people that will have to go to their accountants and will then obviously have to pay fees because the accountant's doing something 4 times a year, or 5 times a year, including the self-assessment, rather than just once. There will be more cost there. There will be a software cost that people will have to pay for. I've got some examples of software which we can go through a bit later on. Um,
Okay.
but they will be the people that are probably affected the most.
You got that to look forward to, everyone. Examples of software. Don't say we don't treat it
Fun
here on the podcast.
and and
Woo!
some prices. Yeah, and
Oh
some
well,
prices.
no. Roll it back, David, because my listeners say what you like about the listeners and viewers here, but they do like a price, and and I'm with them on that. So maybe I think they may have just retained a few there. Let's get straight into some answers to listeners' questions in the shape of for this week. Nobody likes to be sort of open and honest about the tax affairs. If we've learned anything, we've learned that. So I've anonymised. No one asked me to do this. I've anonymised anyone who's asked a question, so that and I've changed then everyone's names to ex-footballers. In fact, footballers from a specific team in a specific year. So that's the kind of side hustle here. Is you can have a little bit of fun trying to work out what team all these people played for and in what year. The team, for those who follow football at all, will be fairly easy. The year might be more difficult, and if you don't follow football at all, don't worry about it. Just focus on making tax digital, so everyone's a winner. Mo Johnston asks, I can hear people already thinking, is there any way you can stop this happening?
A simple answer to that one: no.
Good, we're off
It's
to a
been
flyer.
it's been talked about now for quite a long time. It's been delayed already. It's coming. Yeah,
Right, there
there's
we go.
no stopping that.
The good news about it is we get straight to the second player, namely Tony Cotty, who asks, what are the reporting rules around partnership income?
Right. So, good question. But partnerships are actually excluded from making tax digital,
Boom.
at least for the start.
Okay.
Um, in doing the prep for this and the talk about this and reading the policy document, it does state within the policy document that HMRC remain committed to introduce partnerships to making tax digital for income tax and self-assessment. So for now, as we're here today, excluded, don't have to do it. Going forwards, at some point in the future, they probably will have to.
By
It,
the way, in
it,
case anyone's wondering, because this is all very well today, but in case anyone comes and watches this in 20 years after the event, we are recording this March 26, so all this stuff kicks off April 26.
yeah, and we're recording this on the day of the spring statement, which is this afternoon.
Oh
So
wow! So we're pre-spring
there, sh-
statement. So
there
if we
shouldn't
look
be
like
any
idiots, that's why.
there shouldn't be any fiscal changes this afternoon, but you never know.
Wow. Okay. So we've done partnership income. Another question from Tony. He says, if my accountant already does my tax return annually, is there going to be any practical difference to me to report quarterly?
Well, if Tony's got normal income, not just partnership income, then yes, he will need his software put in place,
Mm.
and he will either have to do stuff in that software himself.
Yeah.
By that we mean reconciling bank transactions, allocating them to cost codes and what we call nominal codes, or he would have to give the information to his accountant. His accountant would have to manage that software for him, and so practical differences, yeah, more regularly, 4 times a year, um, but not if he's got partnership income.
Um, are there any penalties for late filing?
Right, penalty regime. Yes, is the short answer.
I'm trying to
The
remember if
slightly
Tony
more,
Cotty took the penalties. Sorry, go on.
you search that then while I talk
I'll
penalties.
find that one out. You do this.
Right,
Yeah.
right. There is basically for each return filed late, you receive one penalty point. You can receive a maximum of 4 penalty points. If you receive your 4 penalty points, then your next late return, you'd get a £200 fine. And if you're late the next time, it's 200 quid. Late the next time, 200 quid. If you've got your 4 penalty points, you then have to do 24 months, so 8 returns of clean on-time returns, and your penalty points get wiped to 0. You would then go through the process of building those penalty points back up again. Well, hopefully you won't build them up again, but if you did, you would build up back to 4 before you get a monetary fine. If you got to 3 penalty points, and then the first penalty point you received goes over 24 months old, that penalty point would get wiped off and you'd be down to 2 penalty points. So it's a point system. It's used similar in VAT. What it does mean is that for the first year, everyone essentially gets an automatic year's grace because they could do 4 returns late and just have 4 penalty points. So yes, there is penalties only kick in when you got 4 points. There is.
It sounds a bit like yellow cards leading to suspensions. I'm thinking how far we can push this football analogy.
This back to the players. Yeah.
So you were saying
it is a little bit like that. Yeah. And then there's slight changes. So that's obviously if you're filing late. There are then slight changes to if you pay your tax late. Now, it's important to distinguish that your tax payments are still self-assessment payments. They are still in January and July if you're in the payments on account. You would have slightly different penalty rates now if you pay your tax late, if you're within Making Tax Digital. And that is if you don't pay your tax on time and it's over 15 days late, you have a 3% penalty charge on the amount outstanding. And if it's still outstanding in 30 days, it would be 3% at the 30 days and 3% at the 15 days. So you've got 6% charge. If you're over 31 days, it's then 10% per annum penalty charge charged daily. So you've got to pay your tax on time. It's going to be fairly strict. One of the things from a personal point of view you might see coming shortly after this, or maybe a bit in the future, but it would be quite an easy thing to do to make taxpayers pay some more tax up front with these returns that they do. It wouldn't be a massive surprise to me if they introduced like a VAT payment type payment quarterly. So I just with them changing penalties for late payment, you might just see them sort of creep in earlier payments for Making Tax Digital customers. That's one to watch out for.
Interesting. I mean, we kind of pay ahead of time, don't we, with the July payment, because that's sort of for next year. So there's already a little bit of that going on, unless I misunderstood it. But
yeah, no, that's right.
That's squared.
Yeah, essentially, yeah, they might look for you to split that. What you obviously have with the payment on account is your payment on account pays your tax. So on behalf of the sort of existing tax year that you're in. These quarterly would be almost up to date real time if they chose to do that. So it would bring it forwards even a bit more. But
fairly, yeah. Okay.
There's nothing at the moment says they're going to do that. It's just you get a feel sometimes for what they think they might do next. It just feels like that would be a natural step for them to look at.
Fair enough. Peter Beardsley asks, is there any political party pushing back on it?
Not as far as I'm aware. It's been talked about for a long time. The Tories did bring this in under their leadership period, but there's been no talk of a Labour government changing it. It seems to be going through without really any pushback.
A question's occurred to me. That's Tom Dillon. Do you think this is a good idea?
Tricky question, that one. I think from a landlord's point of view, probably not. From the revenues point of view, absolutely, definitely. I wrote down in my preparation, I wrote down a few of the benefits to HMRC. Not just the ones that they have in the policy document, but what I think is their benefits. And they will absolutely reduce the tax gap, because some people will be scared. If they're hiding income at the moment, they'll probably be more nervous to hide it when they have these extra reporting requirements. So they will reduce the tax loss. They will prompt people sort of to keep better records, because you're going to have to do it quarterly, not at the end of the year. And it will make it essentially more difficult for unintentional or intentional sort of avoidance of income tax. So from their side, it's definitely a good thing. To the taxpayer, this probably depends on how many properties you've got and how active you are at managing your portfolio. So if you've got a large portfolio but you've been fairly passive about what you're doing, this will prompt you to look at the income and expenses of each property. So from that side, that I think that for everybody is a good thing. When interest rates are high, there's movement around people's portfolios. Tax rates are going up with the income tax in 27. I don't think that's a bad thing. But again, we come back to these people who drop their books off sort of fairly late on. They might have an employment job. This is just secondary income. They don't really want to do anything. For those taxpayers, there's going to be more administration, probably extra cost from an accountant, and extra software costs. So for them, it's not a good thing.
The shape that I see emerging from the mist is that those type of folks. We talked about older people, but also I know a lot of all seems to be IT professionals or people like that. They've got a little bit, high incomes or doctors, and then they've got a few properties as well. Those kind of people, for whom it's very much, as you say, a sideline or a part of a retirement plan.
And I think this comes at a time when most people's property income is probably being squeezed, either from higher interest charges because the interest rates are still high, or the tax burden. It might have pushed them into higher rates, and they're not getting full interest relief at full marginal tax rates. They're only getting 20% interest relief. There's no doubt that property landlords at the moment are being squeezed. So this comes at a time where really they're then going to have extra cost of doing this. Might be quite frustrating. And I do see that. Like from the accountant's side, yes, there might be little bits of more work, but the best work for accountants really is when you have a willing client and a willing accountant. When you've got a sort of a withdrawn client who doesn't provide the information on time, all of these deadlines are the same as well. So all the quarters have to be June, September, December, and March. What we don't want as accountants is 100 landlords that go on the 7th of August for their June quarter. Here's my stuff. So, and which we might find. We'll have some that are very organised. We'll have some that aren't. So yeah. I can see why they've brought it in. I can also see why there'd be resistance. With the software that's available now, and in this sort of age of digital reporting for most other things, I think it probably was only a matter of time until they bring it in anyway.
You're normally on holiday in August. This is going to be a nightmare.
7th of August. It's school holidays, yeah.
There's no way. Yeah. It's all going to collapse. Paul Rideout asks, speaking of finances and things, getting straight to the point, Mr. Rideout. Well done, by the way, for scoring the winning goal in the 1995 FA Cup final. He says,
the year away, then.
No, I didn't, because that's the year he scored the winner in the FA Cup final. Not necessarily, and I'll give you a clue. Not that year. Not the year that this squad is from. How much? Although is the right team? If anyone's not got the team by now, then they're out of the game anyway. So I don't think I'm giving too much away. How much is this going to cost me? Paul asks.
That's going to be practice. Each accountancy practice is probably going to have a different standpoint on that. It will depend how much of the work is done by the landlord themselves compared to the accountancy practice.
Right.
Is it going to be 4 times what you currently pay? Probably not. I think from our point of view, it wouldn't be. But it might be 3 times what you currently pay, because you're doing 4 extra returns that might be half the cost of your normal one, of your normal tax return. So yeah, if you're expecting the accountant to take on the work, you are going to pay something to them. But it will depend practice to practice. There'll be some practices out there that are very pernickety. They want every detail on time by a certain date. and they'll charge a cost for doing that. There'll be other firms, I assume, out there that will probably be slightly more slack than that. And if you end up with 2 quarterly reports that are the same, then they might not mind, so that might be cheaper. It will be dependent on practice.
Okay, there you go. Hope that helps, Paul. Paul also asks, could I choose to invest in accountancy software and record my own incomings and outgoings? I guess this is Paul trying to say, well, look, that sounds expensive. How about I do it myself?
Yeah. Well, 2 parts to that question. Firstly, you're going to have some form of software.
Right.
So whether the landlord themselves takes the software out in their own name, or they use a practice to do the reports for them, somebody's going to end up paying a subscription somewhere along the line. So it's likely that cost is going to end up back with the landlord anyway. If you wanted to manage your day-to-day sort of reconciling of transactions, then it will 100% be cheaper to have your own subscription and to do your own quarterly submissions, and then give those submissions at the end of the year to your accountant and say, here's my 4 making tax digital submissions, please do my tax return. That will be cheaper than going to the accountants and saying, you do my quarterly submissions and my end of year.
I'd like to add something to that, but I can't think of anything because seems to make sense. So I'll go on to the next question, which is,
That's good.
yeah, it's the first time it's happened. What software is out there? Paul, this is still Paul, and is the one that you can recommend? I've got early days, yeah, isn't it?
Right. So, yes, there's many pieces of software out there. In searching for some of these prices, just so I could get some prices across, they all seem to be fighting for the Google space at the top of the rankings. I've picked 4 that we could go through.
Okay.
So Xero, which is probably one that a lot of people will see the TV adverts for. I think it's pretty good for all small businesses, not just landlords. For their landlord package is 35p for 6 months and then £7 a month after that.
And for anyone who's never seen Xero written down, it's Xero.
Yes, that's
Continue.
right. It's very easy to use. So that is, you connect your bank to it and off you go. Pretty good, Xero. We get to Sage. Now, Sage is obviously a name that a lot of people will know from well, not even historic, it's current as well, but historically it pretty much cornered the entire accountancy market. Most people, you say, oh, where are your books and records? Sage. That's changed sort of more recently, last 5-10 years, where more people are on other systems. Sage are actually offering a free version of software, free forever, they say. There's always a bit of a question mark on that when they say free, no billing. At some point, you would think they'd want some money, but they're offering sort of like an entry level system for free, but can do making tax digital returns. So that seems a fairly good option. We come to one called Free Agent, which is sometimes given away with bank accounts for free. So if you can get it with your bank account, fair play. That seems pretty good. Without it being attached to a bank account, that's £10 a month, but with 6 months at 50% off. Okay. So Xero, Free Agent, similar pricing. Sage, we can get one for free. Now, the interesting one, which some landlords might want to have a look into, is Hammock. Now, Hammock is it's an accounting system, but it's specifically designed at landlords with properties. So in Hammock, you can store all of your completion documents, your insurance policies. It integrates with one of the valuation sites where you get up-to-date market values. It calculates your yield for you and all spits it into a nice dashboard. It looks really nice. It's a pretty good option for landlords, but it is a little bit more expensive. So 1 to 3 properties, £9.60. 4 to 10 properties, £18 a month.
A month, yeah.
A month,
okay,
yeah. But if you've got 4 to 10 properties, £18 it is not loads. Those numbers obviously include VAT as well, because I'm talking landlords can't be VAT registered. 4 to 10 properties.
Just in the interest of full disclosure, which ones of those, if any, do you have personal experience of dealing with? I guess you deal with the back end, do you?
So we've got clients. I've got no landlords on free agent, but we've got
Yeah.
clients on free agent. I've got no landlords on Sage, but clients on Sage.
Yeah.
I do have landlords on Hammock. Of mixed sizes, Hammock's quite good if you have different ownership. So you
Okay.
can tell, you can put all your properties in one place, but if you own
Mm.
some 50/50 and own some 100%, you can tell it that and it will still work out your tax return figure. So it's quite nice for that.
Yeah.
And the vast majority of our client base is on zero
Mm.
landlords and normal business, normal small business, small medium
Okay.
business.
So
So
roughly,
experience of using all of them, yeah.
yeah, fair enough. Speaking of money and full disclosure, can I get a kickback by posting a nice Zero link with this podcast and get people to click on it? I'm on Zero, so that's the only place I'm going to get a kickback link. Do they do a
Um,
refer a friend scheme? I should look
no,
into that.
we can look into that.
Yeah,
I don't know. We
mm.
get a small discount on the Zero subscriptions. We are talking a small discount though,
Yeah,
to
okay,
go
fair
through the
enough.
practice, but
Yeah.
it's not going to change anybody's life.
No, sure. No, fair enough. Okay, good. I think we've been open and honest there. Gun to your head, which one would you say people should use? Or does it really depend on their situation?
If you can get something for free and you don't really want to do it, then that seems like a good option to me.
Yeah,
Um, if you're into it and you do want to look after your records and you maybe want to know a little bit more about what your portfolio is doing, then Hammock or Zero.
fair enough. That Paul Rideout is out of questions there. Brings us on to Pat Nevin. Pat Nevin. He asks, I have a few different bank accounts for property stuff. Is it a good idea to set up a new one to keep things clean, inverted commas, and help deal with making tax digital that way?
Right. So with this one, you might come across some people who have rental income going into a normal personal bank account. It's got normal expenses going out. It's got their own mortgage, their own bills, the trips to the pub, whatever else.
Yeah,
In that respect, 100%, a separate bank account is, I would say, is very important, really, because
bit
you're
of a
going to be
must.
giving your quarterly stuff for to your accountant each quarter, and they don't want to see 90% of those transactions. They only want to see your rental income and your rental expenses.
Right.
Um, if you have multiple banks and you manage them in a certain way, so let's say your rental income comes in, you shift some out to savings, use it as a tax saving account, something like that. Um, it's not critical that you have one bank account because with all of these software systems, you can connect multiple bank accounts. So
Okay.
every day, with those software systems we've spoken about, the following day, it will bring in the transactions from those bank accounts that you have. It isn't critical to have them in one account. Some people manage their money in very strict ways. I wouldn't necessarily say you have to change that just because of making tax digital.
Okay. Good. Next question. Further to that, I noticed that some banks, and you mentioned this
Yeah,
already, you
yeah.
touched on it, I noticed that some banks are gearing up for this by offering accounts with features like free, inverted commas, access to premium versions of accountancy software like Free Agent. What are your thoughts on these, and which one do you think is best? Pat Nevin likes air quotes, it seems, judging by these two questions.
Yeah, so really, um, with most of the bank, well, I say no, not most of the bank accounts. I noticed that Monzo was offering a Sage account. I know that NatWest has previously been linked with Free Agent. I'm not sure if they're still doing that now. But
Mm,
if you can get a free version of software for an account that you're perhaps already using, or you're shifting bank account for a free one, is probably quite a lot of effort depending on how many tenants you have.
sure.
If you can get a free version with your existing bank, then try and do that. All of these systems for somebody who's got a couple of properties will do what you need them to do and won't cause your accountant any more headaches than the other ones. Um, if you can get one, go for it. Yeah.
Fair enough. Okay. Finally, Joe Parkinson asks, husband of a little left field, Joe Parkinson. He asks, what number am I thinking of?
When I saw that question, I thought, what do you mean? What number am I thinking of? Yeah, I'm not Darren Brown. Um, but picked a number and I
Good.
picked 5 billion.
Wow,
Right.
that's a
That's
big
the
one.
number I'm thinking of. That is the estimated HMRC tax gap, which HMRC are trying to reduce by
Mm,
introducing making tax digital. So
per
5 billion,
year.
Joe. Yeah,
5 billion. How many hospitals is
yeah.
that? It's quite a few. And I think is it 500 million to run a hospital a year,
It's a lot.
depending on
It's
the
a
size
lot.
of the
It's a lot of
hospital.
money. That
Mm.
it's a big hole that they calculated to 18.5% of the entire tax gap
You mean
in
the
the
entire tax
country.
take?
No, so they calculate a gap of how much lost revenue they think they've got.
Oh, I see. But as a percentage of
Yeah,
what? So total tax and then what they're missing, sort of thing.
total no, yeah. So the gap might be, let's say it's looking at those numbers, probably about 25 billion,
Right.
and 18.5% of that
Oh, I see.
gap
I see.
is made up by landlords and self-employed that
Gotcha.
fit into this criteria. So
Gotcha.
it's a big figure for HMRC. You can obviously see why they've wanted to bring this in.
Mm.
It took them a while to bring it in as well, with it being delayed, and it's coming in over a number of years. Um, yeah, it's a big figure. So there we go, Joe. Five
I,
billion.
I'm not sure Joe Parkinson knows the number 5 billion. He does now, but in case he did, be interested to know in the comments if we didn't have them disabled, whether you could, if that was the correct answer, Joe, please. So I'm desperately racking my brains. I always do at this point of the podcast. That brings our questions to a close. But I was trying to think of what, because people are going to ask and say, "Why didn't you ask him this? Why didn't you ask him this? I want to know this." Well, first of all, you should have freaking thought of that and sent me the damn questions in. But second of all, is why don't I just ask you, because I can't think of anything obvious. What have we've tried to cover off the basics of this and get people as prepared as possible, and at least give them a glimpse of what's coming up. I suppose
Yeah.
a little. So I'd welcome your thoughts on if we've missed anything that I should have asked. What should I have asked? Do my job for me. And or to maybe do a bit of my own job myself is, okay, we've talked about making tax digital. What else is coming down the pipe that us as landlords or self-employed people or business people in general should be aware of that might be a similar ilk to this and might be even more impactful or a bit more left field?
So not so much making tax digital, but obviously most landlords will have been feeling the pinch over the past few years with the interest
Mm,
changes.
sure.
We're going to get some new tax rates from April 27, where we've got an extra 2% on each tax band. So that's going to hurt again. We've got frozen um, basic rate thresholds and personal allowance. So as hopefully our rental income increases slightly each year from the same property, our rates at which we're allowed to earn income at the percentages is frozen. It's not particularly helpful. On top of that, then landlords, we pay the extra 2% tax.
You're full of good news.
Um,
Is there a happy ending to this story or what?
type of happy ending you want? Well, no, not there's not particularly, Tom. No,
Oh,
I
really?
suppose it's just. I suppose what landlords need to be thinking about is,
Selling
are
up.
they? Well, for some people it might be that, Tom. To be fair,
Sure.
Uh, for some people, some people are in it for income, aren't they, month to month? Now they must be getting squeezed heavily because a lot of people I deal with now, their income month to month is small.
Mm.
So most people are probably in it for the capital growth. So I suppose it's to get most landlords to start thinking about what do they actually want from holding the property that they have. Eh, can they suffer sort of year to year what might be losses with the interest charges, but also having tax bills? Do they want to do that in exchange for longer term capital growth, or or do they need to move some of these properties on? Do they need to reduce their overall borrowing across a portfolio? There's lots of questions that they could ask. They could be asking themselves, and maybe these quarterly returns will sort of prompt people to think, "Oh, I'm losing money in the quarter. Like,
Mm.
what do I need to do?"
Yeah.
So that would be my big thing, is for people to assess what they actually want from owning this property and what do they want to achieve going forwards, and then start to work out how they can do that. Sometimes more property isn't the answer, depending on people's circumstances. It might be less with less borrowing. Um, so yeah, let's get people thinking really about what they
I think
want.
that's an excellent. I think that's an excellent answer. I've heard cryptocurrency is good at the minute for crazy returns in a short period of time.
No,
What's
I'm
your
not
view on
talking.
crypto, Dave?
I'm not getting. I'm not getting involved in that. I'm here to talk about making
Not
tax
your area.
digital.
Yeah. Not
No
your
comment.
department. Right, very sensible, very
Well,
wise.
to be fair, with crypto, it's going to get taxed eventually, like as if it's sort of held like a share. So the regime around taxing crypto is probably going to get stricter in the next few years. The problem is, I think, the lack of understanding. the revenue side of how it actually works, and also my side. I'm not a crypto person, um, but if they're losing money by not taxing it, they're going to find a way of taxing it eventually.
So, in case anyone's doubting that David's a real life accountant, I think now you know. Now you know that he's for real.
Meanwhile, I can sit on the fence when I need to. Yeah,
exactly, like a good one. Meanwhile, now's an excellent time. I think we can both agree to reiterate that none of this constitutes financial advice. You should always take professional advice, etc., etc. Okay, excellent. I think that about wraps her up. We're gonna, as always, post a few useful links. Someone sent me a Guardian link, funnily enough. Other newspapers are available to a bunch of. They've done an article about linked bank accounts in case anyone wants to ask me that. That's where I saw that. So we'll post that. We'll post all David's contact details and things like that. But people are lazy, so in case people want to get hold of you right now because they've liked what they've seen and they want to change their accountant or get an account if they've not got one, that'd be an excellent idea. How can they get hold of you or your firm?
So the best phone number is the office number, which is 0161 703 2500. Or you can email me directly, and that is david.herd, and herd is spelled HERD, at championgroup.co.uk.
Herd as in bunch of sheep all gathering together as David whacks them with his crook into the pen. All the fees into the pen. That's how that goes. I'd like to take this opportunity to thank you all for listening, watching and consuming this excellent content. Really welcome any other links, anyone that people want to put forward as a speaker. If anyone recommends anyone, we do try and get them on. Not always successful, but we usually are. And please, comment, like, subscribe, and we'll catch you next one. We've got lots coming up in the next couple of months. So excited to share. See you all soon. Thank you, David.
Thanks, Tom.